Hey everyone, we are live again. I hope that you all are doing well. It's been a little while since I've been on the live, but I have been uploading. So if you're subscribed to my YouTube, you have been seeing the uploads that I have been doing on my channel, the videos that I have been uploading to my channel. Today, we're going to get into the gold price rising as well as silver demand in this article from Sprott that gives us some insight to what's happening there, and as well as the oil price in the midst of war going on and continuous pressures on that market. So let's go ahead and kick the intro, and then we will get into what we came to talk about today. So let's get to it right back.
Think. Act. And prosper. You are now tuned into the Money Level Show.
All right, we are back. We are back. Oh, I got a comment already. My guy Max, what's up? What's up, man? Good to see you. Good to see you. I've been living good and everything. Just take care of the fam, man, and just trying to live the best life possible as possible. I'm doing that, and then still staying in tune with the markets and everything. I hope you're doing well. My guy Avery, hey, appreciate you for chiming in, bro. Be sure to follow Avery on Twitter. He provides some good insight, some inspirational stuff. Like, this dude is a really good investor, and he purchases the products of the companies that he invests in. He follows Warren Buffett's advice, and so that's my guy there. So appreciate you for chiming in. So I hope that you all are doing well and everything. I just wanted to come on live just to chat a little bit about what's happening with the commodities market. We've seen the gold price spike significantly. We had news come out that Costco was running out of gold bars to sell, and which was pretty interesting. From a lot of investors that buy physical precious metals. That was an interesting story. And then, silver demand continues to rise, as well as the oil price continues to rise. And we're going to look at, why is that? And so if we're going to jump over to this first, sorry, y'all got a burp. We're going to jump over to the chart first. So let's do that. Let's start there. I got a few tabs up that I want to go through with you all. Let's see. Here we go. Boom. All right. So first, we're going to look at the price of gold. So price of gold just shot up, 3% on one day. So I'm just looking at it here. Obviously, the price had dropped significantly. I mean, we hit 2100, back in close to 2100, almost broke a all-time high. And that was in May. Then it dropped significantly. Then it popped again, 3%. So it dropped down to about, almost $1,800, 1807, something somewhere around there. And it just popped back up, over $100. So, what is happening here with the price of gold? I mean, obviously we see here on this trend line here is that this is normally the resistance for gold. Like, it keeps, over the last 3 years, right? The last 3 years, it keeps hitting this level and it's not really piercing it, and so it's not closing above it, but it keeps hitting it and within the last 3 years. And I think at some point we are going to break through that. But what is happening here? So first of all, we have to look at, okay, what's happening in the macro environment, right? So we did have another situation happen with the Israel and the Hamas. And so I'm not going to act like I'm an expert on any of that. I have been, kind of diving into that to see what is happening there. My heart goes out to all the people that lost their lives there. I just think that, killing innocent people is just, it's wrong. And, whoever does it, and so, it's very sad. So prayers go out to them. But as you can see, Gold price, had dropped significantly back in 2022. So this rise right here was after the invasion of Ukraine. So Russia invaded Ukraine. First, you had the pandemic, right? So the pandemic, hit, gold dropped. This is March of 2020. Gold went from 1,700 an ounce down to 1446 an ounce. This was actually when I was started buying. A little bit after this, I started buying gold, and then gold just shot up significantly to over $2,000. It corrected itself, right? Corrected itself. It had a couple bounces along the way, but then you get this rise here. So this rise here was after the invasion of Ukraine by Russia. So as you can see, I think that was announced somewhere in February of 2022. That happened, and then that invasion happened, and then the price of gold just shot up, to over 2,000. So we see that gold is a hedge against uncertainty, a hedge against chaos and uncertainty in the world. This is why you have to hold precious metals because politicians make stupid decisions. The Fed, then central banks make stupid decisions. So we got a few comments in here. What's going on, Eldon? Hey, glad to have you here. Glad to have you here. My guy Avery said, once that pullback gap is filled, the breakthrough will be monstrous. Yes. So he knows the charts. He knows the charts more than me. I know a little bit about the charts, but he knows them more than me. So I'm glad to hear that comment. So when I'm looking at this, like, gold keeps responding to these situations that involve like global chaos, catastrophe, obviously, issues with the banking system. I mean, we can look at that here, right? So let's see. March of 2023, we had the banking crisis, right? Gold shot up, for the months following that. It shot up to $2,000. I mean, obviously, people think that oh, well, the world's going to restabilize itself and everything's going to go back to normal, right? But as you can see, in these 3 years, we've had significant situations that have happened in just 3 years' time. I mean, we had the pandemic, right? Global pandemic we've never seen in our lifetimes, right? Then you had the invasion of Russia, Ukraine. Then you had another banking crisis. You had another banking crisis, which gold shot up significantly here, right? And this was during the banking crisis. Then it corrected itself again. Now you have the Israel-Hamas situation. Gold reacts again. So that has to tell you something, right? Israel-Hamas, banking crisis, Russia-Ukraine, pandemic, right? Gold reacts to chaos in the markets. And so this is why we hedge ourselves by owning precious metals. This is why you insure your wealth by owning precious metals, right? And if you haven't even bought precious metals before, if you do, I am an affiliate with Miles Franklin, so you can email Miles Franklin at info@milesfranklin.com or call this number and tell them Daryl Thomas or the Money Level Show sent you. Talk to one of their dealers. They can plug you in and be sure to take care of you. And you support the channel in that way as I provide this free educational content for the viewers. So, and we can go a little bit farther back too. I mean, let's see. Let's look at this, right? I need to. Sometimes you get so many subscriptions, right? And you're just like, man, I won't have this many subscriptions. So here, the great financial crisis, you saw gold rise, this November 2008. Gold rose, right, from $700 an ounce to $1,900 an ounce, over $1,900 an ounce. So gold responds to chaos. I mean, I just proved that 5 times here, right? We can go back again. What happened over here from this period, right? Gold's trading in the range, right? 2001. What happened in 2001, yo? 9/11, the war on terror, right? You don't see an immediate response. I mean, I'm sure we can go in and see some bumps, but you have the war on terror, and like for the next, however many years, right? Gold. I mean, you had the .com bubble burst first, right? Then you had the war on terror, and you get gold rising up to from what 200 something dollars an ounce to $700 an ounce, or close to 1,000. It corrects, and then you have the global financial crisis. Then it pops again. So we can see that gold responds to crisis. I mean, that's just just what it is. I mean, if you and so oh, thanks, bro. Appreciate that, man. I look at the macro sometimes. I like to get into the micro and look at the charts and stuff too sometimes, but it's usually it's crazy how like when you see the long-term trends and you understand like things that happen or how markets move in the macro, how you can go look at the charts and it supports like what the macro is saying. So I mean, even when I talk about like the .com bust or recessions and stuff, like and what's happening in the banking system or with geopolitics and things like that, and how that causes these economic events to happen, then you go straight to the charts and you see exactly what happened during that time. So yeah, appreciate that. So we're going to go ahead and jump over to another reason why you want to own gold, right? Is because of the bank bail-ins, right? We talked about the Dodd-Frank Act before with Andy Schechtman on the show, and this talks about why bail-ins are the new bailouts. And so this is actually I'm gonna pop over here first. So this is an analysis from the FDIC.gov. I mean, you see that on the website, right? And this is from multiple bankers. I mean, you had Goldman Sachs, financial institutions, the Federal Reserve Bank of Philadelphia, University of South Carolina, and they put together this analysis and pretty much they talk about the difference in how the bailouts and bail-ins work, right? So they give you three different options, right? First, you have bailouts, which means that the government provides capital. Now, we all know that our government is broke. They are spending taxpayers' dollars, right? So technically, we have to fund that on the other side. I mean, we saw this in 2008 when the banks got bailed out, and you had many protests against Wall Street and Congress and things of that nature because taxpayers didn't feel like they should bail the banks out. However, I mean, then if the banks would have went bust or whatnot, many people would have lost a lot of money, right? So you got your trade-offs there. Bail-ins is when the private sector provides the capital for the banks. So let's say a bank is going under and they decide to keep the depositors' money. So you're insured up to FDIC, which is 250,000. However, we've talked to Nomi Prinz before. The FDIC does not have enough money to cover the possibility of all banks going bust at once, like in the banking crisis or the banking crash of 1929, right? So bail-ins, right? So anything above $250,000, that bank can say, "Hey, give me that money." You get insured by FDIC 250,000, but we need the rest of that capital. So when the banks can bail in and take your money, this is why we say gold is money. It insures your wealth. It's insurance for your money. It's been money for thousands of years, right? I mean, y'all know I'm into Bitcoin too, but we're talking about gold right now. So gold is the most conservative way that I preserve wealth, and I do add to my Bitcoin position too because I do have my views on that. And then you have no regulatory intervention, which means that we let the banks go bust. What happens when we let the banks go bust? I mean, this happened in 2008. We had Lehman Brothers go under, right? And when the Fed allowed Lehman Brothers to go under, the markets tanked bad, right? Tanked bad. So it was bad for a lot of people, unless you weren't invested in the markets. I mean, for me, like I was working a warehouse job. I was not invested in any markets. I did have a bank account, but it wasn't with Lehman Brothers, right? And they let that bank go bust, and that's what happened there. So, um, and then this article from Investopedia talks about why bail-ins are the new bailouts. I was going to go into the actual law of Dodd-Frank. It's a lot of stuff in there. Like I did not want to skim through it, but I do trust Investopedia. I think they do good research and they pull good information out for people to learn about financial terms and things of that nature and financial concepts. So thank you for putting this out. Right. So the world experienced economic turmoil in the 2007 and 2008 financial crisis. Low interest rates boosted borrowing, a boon to existing and prospective homeowners. I don't know if that meant to say boom or boon. I don't know. I think maybe boom. But created a bubble that would impact consumers and the world banks. And so then talks about the Great Recession that ushered in the term too big to fail. The rationale for rescuing some of the largest financial institutions with taxpayer funded bailouts. And that's what I was saying. Like it says on that one article, that one analysis from FDIC that banks, can be bailed out, which means the government provides the capital, but it's like, okay, this money can't just be printed from nothing, right? It can be, but it has to be funded by someone. Right. And we're not even going to get into we're going to get into that later. Right? We're going to get into the debt and the deficits later. Right. But, this is an important piece. So in 2010, Congress passed the Dodd-Frank Wall Street Reform and Consumer Act, which eliminated the option of bank bailouts, but opened the door for bank bail-ins. All right. So the big takeaways from this is that big banks were deemed too big to fail following the financial crisis, resulting in government bailouts at the expense of taxpayers. Financial reforms, eliminate bailouts and open the door for bail-ins. Bail-ins allow banks to convert debt into equity to increase their capital requirements. So, for example, when they do this, bail-ins are like, okay, say like you're not insured over 250,000, or you're a shareholder of the bank. Like, the bank can say like, hey, sorry, shareholders, like we need the equity, so they can just liquidate you. So bail-ins and bailouts are designated to prevent the complete collapse of a failing bank. The difference between the two lies primarily in who bears the financial burden of rescuing the bank. In a bailout, the government injects capital into banks, enabling them to continue their operations. During the financial crisis of 07-08, the government injected $700 billion into companies like Bank of America, Citigroup, and using taxpayer dollars. And that wasn't a lot then. I mean, that was a lot then, but like that seems like peanuts today, just how much we're spending today. I mean, we're spending crazy amounts of money today. Crazy amounts, way over 700 billion, which I'm gonna show you later. But we're spending way over 700 billion, and this is where back then that was a lot. Like a lot of people that from back then, they were like, dang, we didn't think the government could spend that much money, print that much money, but they did. And they did it again during the pandemic. So bail-ins provide immediate relief when banks use money from their unsecured creditors, including depositors and bondholders, to restructure their capital, right? So it says immediate relief when banks use money from their unsecured creditors, including depositors and bondholders. Unsecured. So that means that you're uninsured because of FDIC, right? 250,000. If you have over that, you're uninsured. And that can be bondholders. So corporate debt, right? To restructure their capital. They can use their money. So this is another reason why you want to own gold. I mean, the other reason is just that the FDIC does not, they're covering $10 trillion of assets, right? With only a little over 100 billion. So that math does not make sense. So I mean, if you have multiple banks going under, then we're all screwed. You know, FDIC will not be able to bail us out. So um, just think about that for a moment. Just think about that for a moment. So let's go ahead and go to the um, we just gotta sometimes we just gotta look, we just gotta go to the national debt clock just to show you all, give you all a picture, a picture of what's happening. Right. Let's go look at it again. It's actually increased quite a bit. I think the last video I did, we were at 32, high 32 trillion. Now we're at 33.5 trillion. We've added another 500 billion. I don't know how much of this was aid to Ukraine or what, but that's how much we added. Our budget deficit has went up significantly as well. I mean, we were at 1.6 or 7. Now we're at 1. No, we're at close to 1.8. So this clock just keeps ticking. I don't know how long they can continue this, you know. So that's why you want to own precious metals. So let's go ahead and pop back over to the charts. We're going to look at some of the gold stocks. I actually added to my positions when I saw that weakness recently. I mean, it bounced up quite a bit. But I started adding Newmont. Obviously, Newmont was at $85 back in April. Now that's cut in half. It went down to what I think it was. Let's see. Newmont went down to $34. So I best believe I started accumulating. I said, okay, this is a solid company. Let me go ahead and start accumulating. You know, because they've been getting beaten up. Even some of the royalty companies, Sandstorm Gold, another one, popped down to $4.28. Let's look at Barrick Gold. Barrick Gold. Barrick Gold fell back down to about $13 and popped back up to $15.74. So as you can see, gold is rising, and a lot of this is due to the economic uncertainty. So let's go ahead and pop over to Reuters. Safe Haven Gold rallies 3% as Middle East conflict intensifies. And for me, just FYI, I do not play the gold markets just based off news or anything like that. I'm not a trader of gold. If I were to trade gold, it would be some of the gold stocks. I just hold physical metals in various places, right? And so I hold physical metals and I buy gold stocks in like my retirement portfolio, or if I have a or in my like regular just trading portfolio. So I only trade with the stocks, right? You know, if I'm going to sell, but in the retirement, I'm holding for the long term. So, but as we can see, Safe Haven Gold rallies 3% as Middle East conflict intensifies. Gold took a significant drop, gained 5.2%. As far on the week, Israeli military says troops make first ground raids into Gaza. Palladium set for weekly loss. I actually sold a lot of my platinum and palladium. It's cheap right now, right? But these metals are just very industry sensitive. Right now, there's not a deficit in platinum or palladium, which is why it's cheap. And if it was a deficit, you would see the price, more pressure on the price upward. And so I haven't been buying them as much. So that's my take on that. Even though you want to be buying now, I mean, now it's a lot cheaper. I mean, you can get, platinum 1 grams for like $30, right? $32, $33, whatever. But for me, I'm like, I got enough platinum. I'm just gonna sit it out, and I'm gonna wait till some of the macro factors change for that. So gold jumped more than 3% on Friday. We're poised for their best week in 7 months as the intensifying conflict in the Middle East sent investors scurrying for safe haven assets. Zero yield bullion got an additional Philip from Philip. No, Philip. I never seen that word before. From expectations that the U.S. interest rates might have peaked. So the Fed's been coming out talking about they may have one more hike. Most people know that we're probably closer to lowering interest rates than raising interest rates anymore. So, and gold is interest rate sensitive. Interest rates being higher usually puts pressure on markets. The dollar goes higher and gold goes lower, right? So that's how that works. And so when the dollar goes lower, gold goes higher. So the spot gold was up 3.2% per ounce. Gold future settled 3.1% at higher. Prices up 5.2% on the week. As you can see, we just had a big pop off the concerning news in the Middle East conflict. And we're going to get over to oil too, because this all affects oil. I mean, like I said, I don't claim to be an expert on these conflicts over there, but we know that oil drives a lot of the conflict, and it drives a lot of energy usage in war and military. And so, yeah. And the last time, well, not the last time, but before in the 70s when we had the oil embargo, there was a Israeli conflict going on then. And so the price of oil just shot up significantly. And that's why when you see these articles like this was like the worst attack in like 50 years, that's because 50 years ago was the 70s when we had another Israeli conflict and the price of oil shot up significantly. Just some other information. Investors kept a tab on developments in the Middle East conflict, which has unnerved markets since the start of the week. Israel said its infantry and tanks had carried out raids inside the Gaza Strip. Its first announcement of a shift from an air war to ground operations to root out Hamas fighters a week after their deadly rampage in southern Israel. Investors are fleeing to safe havens as the risk of the Middle East tensions grow. If the geopolitical situation gets gloomier, there's a good chance that gold prices could go to the 2000 levels this year. We have come from mid 1800s to mid 1900s. 2000 is just a fraction of that. It was at 2000 earlier this year. And the consumer prices increased. U.S. consumer prices increased in September amid higher costs for rent and gasoline, but underlying inflation is slowing. I got this funny chart to show y'all too about inflation. These people are crazy. Apart from the conflict, despite yesterday's warmer than expected inflation report, currently there's an expectation that the Fed will not hike rates in November meeting, which is also helping gold prices. Right when they stop hiking, gold is on the brink of breaking out. I mean, think about, let's just look at this. Like, I'm not even like, I just so know the macro so much. Like, I'm not even gonna I never even looked at this on the charts, but I just know the macro so much, right? So here we go. I'm just gonna share this really quick. It's the price of gold per ounce. So when the Fed raises rates, the price of gold goes down. When the Fed lowers rates, the price of gold goes up, usually. So right here, as you can see in 2018, you had the Fed, Jerome Powell, come out and raise rates. So when they raised rates, this this plummeted the gold price, from close to 1,400 an ounce to about 1,100 or something an ounce. And so that just shows, like, when they raise rates, gold goes down. Now, this is different here, I would say, because the Fed was actually kind of raising rates during this period and gold still rose. Then after the global financial crisis, the Fed cut rates and gold still fell with that. Now, but another way to look at this as well is just that the price of gold rose even more again when the pandemic started, and the Fed cut rates to zero. Gold rose up, right? Pandemic rates to zero. Then, gold ended up, chopping or whatnot. Then it goes down significantly. Pops again. Then you had the Fed, they've been raising rates again. So gold's just been kind of in this weird range where it's not really breaking out of as much. And so just wanted to show that really quick. All right, let's check the comments. Anybody comment? I see my guy Ken's up. Money up, commodities up. Those who knew know that more liquidity is on the way. Most every war, that is the response. Yeah, like, it's like governments are robotic in some ways. Like you can expect certain things. And so obviously Ukraine was a highly political, Western political nation, that there's a lot of news around, like, wanting to add them to the what is it? Not the UN, the UN or something. But I don't know all the terms. I'm not an expert in geopolitics, but there's a lot of interest around Ukraine. There's a lot of interest around Israel. Even more, I would argue there's probably more interest around Israel than Ukraine. So I'll be interested to see how this plays out. But we know that, weapons are likely going to be sent over. Aid is likely going to be sent over. And more money is going to be printed. So definitely. Ken said people are going to return to bonds, I think, until if inflation spike higher and they realize they're losing. Even with 5% return, gold, silver, real estate, and commodities are the only options. Yeah. So right now, the yield curve between the bonds and T-bills has been kind of closing in. So I think the 10-year is up now. Not higher than the T-bills, but usually you have that inversion where the T-bills are paying a higher interest rate than the actual the Treasury bonds. But but that gap has been closing down. So like on the longer end of the curve, I think more investors are piling in. So yeah. Appreciate you chiming in, Ken. So as we can see, apart from the conflict, despite yesterday's warmer than expected inflation report, Fed will now be raising interest rates, which is now helping gold. Traders currently see around 69% of the Fed leaving interest rates unchanged this year. Spot silver climbed 4% to 22.72 per ounce, on track for its first weekly gain in 3. And platinum rose 1.4%. Palladium dropped 0.3%. So I already shared my thoughts on platinum and palladium. We're going to get to silver in a minute. First, let's jump over to oil. All right, so this is another article from Reuters. I was kind of breezing through. So it talks about oil and the treasuries and how those prices jumped amid the Israel conflict. Oil, U.S. treasuries, and gold prices rose on Friday, with crude soaring nearly 6%. So crude soil soared nearly 6% on the week, which I'm gonna pop over to Twitter. I got some. Uh, it's kind of this is very interesting, y'all. Like just the amount of you know information that contradictory information. So we're gonna jump to this. I just had to pull the tweet up. All right, so Brent crude surged 7.5% in a week since the conflict began, posting its highly weekly gain since February as investors priced in a chance of escalation in the world's top oil producing region. On Wall Street, S&P ended lower. Okay, it says banks. I don't care about the banks. Israel military called for civilians to leave Gaza City ahead of an anticipated ground invasion in response to devastating attacks. The yield on the 10-year treasuries was down 8.2 basis points. Spot gold rose 3.2%. Brent futures rose $4.89. Settled at 90.89 a barrel. And crude closed at 87.69 a barrel. The goal is to get a safe asset that would work if the ground assault gets bad over the weekend. As well as that safe asset, we know that oil is going to be used. Everything that's going on in the Middle East is getting more and more, unfortunately, depressing, and seems to have the potential to get worse. And I don't know, like I'm gonna say that again, I don't know all the religious dynamics there and everything, but it seems like when there's situations like this happening, it can get intense pretty quick because you have very passionate people about their belief systems and things of that nature, and it can get pretty ugly, right? So this is about the Dow and everything. Talks about the dollar index. It didn't really share much about oil, but we're going to pop over to with Josh Young, good friend, came on the channel recently. He had a recent tweet on October 12th. Do you believe in magic? Right. So this is from I believe it's from the IEA, I want to say, the International Energy Association. This talks about the crude total production. So it says the total production has spiked, which is interesting, right? But the rig count, the amount of oil rigs are going down. So the oil rig count has continued to decrease. So like, as you can see, this chart is heavily correlated, right? So when the oil rig count goes down, that means less oil is being produced, and the price of the production goes down, right? When the oil rig count goes up, you can see that the production goes up, right? So this is an interesting inversion from this chart, and so it makes it. And then Josh Young says here, that's right, pretty unlikely, similar to how radically low gasoline demand numbers in last week's report. So that's kind of interesting that this data came out saying that our production increased, but the oil rig count continues to decrease. There's still not enough investment in the space. Exxon did just acquire Pioneer for like $60 billion. I mean, that's a huge bet in these current financial landscape, right? So that's it's kind of interesting that chart shows that. So let's see if Exxon acquires Pioneer. Let's see if Reuters, they probably have an article on it. All right, here we go. So Exxon makes this huge bet They bought Pioneer Natural Resources for $60 billion. This is in a time, right, where liquidity, isn't looking too good, right? And obviously the narrative towards oil is continues to be negative, right? And they go out and buy this for $60 billion. Now, was this just a financial mismanagement, or is this saying something? Is this saying something? Right? I think it's saying something. I think it's saying something positive, right? Um, I mean, you can see, let's go over to Warren Buffett, Berkshire Hathaway's investments. Let's find that real quick. We looked at it before, but I don't look at it very often. Let's see. Here we go. All right, this is the portfolio tracker for Berkshire Hathaway. Okay, so it doesn't show. I'm trying to see how much he's added recently. All right, so here we go. So Warren Buffett's still betting big on energy. So the percentage of portfolio of Berkshire's holdings, he obviously still believes heavily in Apple, right? He still believes Apple, 50% of the portfolio. That's a huge amount, but he knows what he's doing, right? And he probably got in at a really low valuation, I'm sure. Really low valuation. So as we can see, Chevron, 6% of the portfolio. He has over $20 billion in his portfolio, right? And then you go down to Occidental, which is, I believe, his favorite that he continues to add to. Let's find Occidental Petroleum. 4.2%. He actually owns more Chevron than Occidental, but he does add a lot to Occidental. And he has 14.5 billion there. So Exxon invests 60 billion. Warren Buffett is investing multiple billion in oil. So, and then you have on top of this the conflict, over in the Middle East. So, what does this tell you all? What I want to hear from you all. What do you all think this communicates? Ken said, I think it's worth watching natural gas too. It's cheap now and things are lining to go higher, in my opinion. Yeah, I'm gonna I actually been looking at natural gas as well. And I think there's gonna be a spike at some point. So I may buy some long-term options or something on UNG or something. We'll see. But I think there's gonna be a spike at some point. So yep. But what do you all think about what I just laid out? Exxon investing 60 billion. Warren Buffett has over 35 billion in oil companies. What do you all think about that? I want to hear from you all. And this is another this is another tweet I wanted to show you all. It's from Paul Krugman. Benjamin had tweeted it out. All right, here we go. This is Paul Krugman. He says the war on inflation is over. We won at very little cost. And so he's showing the 6-month change at the annual rate of inflation. It says it's below 2%, right? But this does not include food, energy, shelter, and used cars. He's not including anything that's going up in price. I mean, the rents in the area I live in continue to rise. Housing market hasn't went anywhere, right? Energy continues to rise. We just looked at oil rising, the price of food. I mean, there's a chart on orange juice that's just insane. Wendy O just posted it, which I had heard about. I had heard about uh, from Shay from Cocktails and Commodities about the price of orange juice. And all right, Wendy, I need to get Wendy back on the channel at some point. We were supposed to have an interview last year, and I blew that one. But she had recently just posted a chart with the price of orange juice. Here it is, right here. Orange juice prices. This is considered part of food. So orange juice since 2021 is up 285%. So if you're going to exclude food, right, we see that the price of orange juice going up. We saw the price of eggs go up significantly. Olive oil prices are up 100% this year. Live cattle prices are up close to 20% this year. So, yeah. I mean, I don't know what this guy's talking about. This is what happens when you follow mainstream financial gurus, or people that don't do. I just feel like they don't do their due diligence in this. And so, what do y'all think about that? What's up, JT? Shout out to JT. Be sure to go check out JT Coin Rings. You all. JT Coin Rings. Oh my God, Ken. Let's see. No replacement for petroleum. The many products made from it that most don't realize. It's not just oil and gasoline. Humans are going to want crude oil for a long time. Yes, it is more than oil and gasoline. I mean, what powers the factories, to make, I mean, and it's just like oil is used in all these intricate products that we use on a daily basis outside of just fuel in your car, and your electricity. And so, yeah, I don't think it will ever be fully replaced, And so, I mean, even Rick Rule talks about there's been what, 4 trillion spent, 6 trillion spent in renewable energy and such, and then they only decreased the usage of oil by 1%. So that says a lot there. See my guy Max. Oil will be here for the long term. How supply and demand plays in the price fixation of a barrel of crude with fluctuating societal and geopolitical factors affecting that. Yes. These geopolitics are no joke. And yeah, we can see that that's going to continue to go higher. I mean, like you got Russia and, Saudi Arabia and OPEC and these other nations. I mean, they're reducing the amount they're producing, they're reducing it. They're like, yeah, we're not going to produce as much. So regardless, oil is needed and the markets will fluctuate and prices will allow factors and sentiments altering the market. For example, Qatar threatened recently to short global gas supply unless Israel stops bombing Gaza. Yeah. Yeah, man, the price got to go higher. The price got to go higher. We got to protect our wealth. And obviously oil is a place that you can be. Something to consider, right? And so let me stop sharing this, but be sure, if you have not yet, or if you want to get into precious metals, be sure to look at the information on the screen. You can email Miles Franklin at info@milesfranklin.com or call this number. They will answer the phone and tell them that Daryl Thomas of the Money Level Show sent you. Check out their weekly deals and buy some metals to protect your purchasing power. Got to protect it. It's got to be a habit. You got to get in the habit of doing this. And for me, like, it's like, passing this down to my kids. You know what I'm saying? I'm protecting myself against any type of financial risks with these bankers and such. And then also, obviously, the risk of economic collapse or global catastrophe, with wars and things like that. So um, let's go ahead and jump over to um, some oil companies. Let's do that before we jump into silver. All right, so I'm just gonna show you all. I've shown this before, but here are some of the companies that I invest in. Right. So let me go ahead and share the screen. Boom. Go ahead and share the screen. Rick keep telling me to get some Exxon Mobil, obviously to reduce risk. But Exxon Mobil, it's not expensive. Like, it has a decent PE ratio, price to earnings ratio, and I mean, obviously they just acquired another huge company for $60 billion. But I just get more bang for my buck buying companies like this, and so. But at some point, I will start diversifying into some of the bigs. Because here with these companies, you do have jurisdictional risks. This company is located in Colombia, but there's jurisdictional risks everywhere. All right, so you got Ecopetrol. Their dividend yield is just insane. I mean, 27.11%. That's quite a lot. Their PE ratio 3.39. They're rated undervalued. So, the decent market cap. Then you got Petrobras. You got Class A and Class Petrobras. My bad, y'all. Got to keep burping. So I own them as well. They do not pay 41%. I don't know why I'd say that. Maybe they pay that at one point, but they're in the 20 percentile. It's kind of interesting because like you get these different dividend percentages on different sites. Like Robinhood would say they pay, I think they say they pay close to 20 to 25%. Here it's saying 41%. Then you go to the NASDAQ and it says something totally different, but it pays a really high dividend. Maybe they declared that though. Well, that's PBRA, so maybe they declared that, and I get the benefit from that. You got Petrobras. They're both out of Brazil. 24.37%. A 3.3 PE ratio. I have an interview coming out with Rick Rule soon. I just interviewed him yesterday. So we talked about the different valuations, and he doesn't necessarily use price to earnings ratio as much, but you will be able to learn some more from that. So these are some oil companies that you can buy cheap that pay super high dividends. They pay more than treasury bonds. Obviously, they have a little more risk, but I mean, you could probably earn your money back in like a year, like probably like 2 years or something, 2-3 years. All right, so let's go ahead and jump over to silver. Sprott just sent this article out about silver demand, and they kind of lay it out with solar and silver, twin pillars of energy transition. Solar leads the drive to clean energy as the world progresses along the energy transition curve. The rapid expansion of solar photovoltaic, I think that's how you're saying, PV technology is a key constituent. Solar panels have emerged as a critical player in the transitioning to clean, sustainable, and secure energy sources. Solar PV panels harness sunlight and convert it to electricity and such, and they go into like kind of the science of it, and they talk about the IEA in their forecasts, which is kind of interesting. But they're saying that this is the cost. So they're saying that solar's cost is less than coal and natural gas. Now, whether that's true or not, I'm just reading the article, right? from the IEA. This is installed capacity from 2010 to 2030. They're saying that the gigawatts per hour of energy that solar is going to have more installed by 2030, 6,000, and they're going to be a higher source of energy than the other forms. Whether that's true or not, that's another that's another story. But I think that this is bullish for silver, especially if governmental agencies are thinking like this, right? They are thinking like this. This talks about the annual demand versus the total installed capacity. This is in solar demand. So we can see that the last 3 years, solar demand has jumped up, and then they're pretty much estimating or projecting that it will jump up even higher as far as gigawatts, and that the total installed capacity will jump up. They go through the solar supply chains, how China controls about 80% of market share across all stages of solar panel manufacturing. So yeah, Ken said a good point. PE ratio doesn't mean much with commodity companies. They will lose money until price spikes, have to buy on future market conditions for indicators rather than lagging indicators. It is not easy. Yeah. And that's why I asked Rick, like, if he does like asset-based valuations, or if he looks at the price to earnings or discount cash flow. Yeah, because you have to look at production and what assets they own and all this stuff, and it can get pretty tricky. So yeah, it isn't easy. And so China controls solar supply chains, so 80% of the market. The dominance results from strategic government policies, massive investments exceeding 50 billion since 2011. The scale has achieved a significantly lower solar PV cost, making clean energy more affordable worldwide. China solar PV products. So we see China control most of the market. That's what a lot of commodities and and things. So yeah, there's a lot of investment that has to happen in industry and infrastructure and energy. So anyways, why is silver so critical to solar panel technology? As solar industry continues its exponential growth, silver is experiencing a surge in demand driven primarily by the evolving technology of solar panels. Silver's unique properties, including its exceptional electricity conductivity, thermal efficiency, and optical reflectivity, play a vital role in enhancing the efficiency and performance of solar cells. Solar panels rely on silver for several critical components, including the front contact fingers, bus bars, and soldering solar cells. So, and then they go into like kind of what the demand looks like. So here you have the demand for silver. You have silver supply and silver demand. So as you can see, mining and production, and then you have recycling. So this is the supply, right? You see the supply it's not as high as it was in 2014, 2020 dropped, 2021 rose a little bit, and then it's, hasn't really changed a whole lot. And then 2023 projected, I guess this is forward looking, 842 million ounces. And by 2030, it would be about 850 million ounces. Recycling currently is at 181 million projected, and then it'll be at 199, and then other 5. I don't know what the other is, but currently that's about let's see, in millions of ounces. So that's pretty much 1 billion ounces of silver. And they're projecting that the total supply would be 1,054,000,000 ounces of silver by 2030. Then you get to the demand. So the demand, as you can see, for electrical and electronics, it's been steady. They use about 200 and something million ounces. Uh, Other demand in consumer industry, all other industry and consumer. I mean, this is reduced a little bit over the year. 476 million ounces, and then physical investing and hedging has reduced a little bit this year from last year, but 309 million ounces. And now you have to overlay the PV, which is the solar panel demand as it increases throughout the decade. And as you can see, they're projecting, well, right now, last year they used 140 million ounces, and then they're projecting 161 million ounces, and then moving forward it'll be 273 million, which will pretty much will be at more of a supply deficit, which is kind of interesting because, like, I mean, as you can see, obviously the demand doesn't seem to move the price significantly all the time. I'd be interested to see more years of data, but it shows that we'll have a negative balance as the demand for silver continues to rise for solar panels. So you have another factor coming in, demanding supply, demanding silver supply. So I hope you all doing all right. Who's still there? What's happening? What's happening? Come talk to your boy. What is going on in your lives? Are you buying precious metals right now? Are you buying precious metals? Are you buying silver? I actually bought a few things. I bought some gold. Appreciate you, Ken. Man, I always enjoy your support. Ken's been supporting my channel for a while. I don't even know how you found me, Ken, but I remember seeing your comments from like two, maybe 3 years ago. Well, probably 2 years ago, because I started my channel 3 years ago. So, man, I always appreciate your support. Just being loyal to the channel. I appreciate that. Let's see. So, Ken is buying. Oil companies already have some silver. Platinum is good too. Yeah. So same here. I've been buying oil. I've been kind of slowing down on silver, even though, like, I feel like now is when I should be buying. Like, it seems it's very psychological. It's very psychological, and so because, like, recently we had the premiums were sky high on American Silver Eagles. Like, silver was at what, 20, 24, 25 bucks an ounce. American Silver Eagles were going for 35 to 40 bucks an ounce. And, I stayed out of the market then. I was able to find local coin dealers that I was able to get them at, like, 28 to 30. And then, and now, the premiums are very low, and I'm like, okay, this is when I should be buying. Like, I shouldn't be buying when the premiums are sky high. Like, now I can get an American Silver Eagle for, 27, 28, 29, 30 bucks. Like, so it's kind of depends, but this seems like the time we should be buying. Platinum, I kind of shared about platinum earlier. I was watching a video from Jeff Christian. I think, is it Jeff Christian? Jeff Christensen. I think that's the name. He does a lot of charts and stuff, but he said that he went through, like, the case for platinum and palladium moving forward, and, like, their usage is heavily in auto industry. And he talks about how the auto industry is slowing down right now. There aren't very many very, very much manufacturing of cars as much as it was before. Obviously, interest rates are high on vehicles and such, and so that industry is slowing down. So now you have a surplus in platinum, which is why the price continues to kind of fall, as well as palladium as well. So that's why I was like, okay. So he was talking about, just when there's a deficit, then you begin to see the price rise more. But right now we're not in a deficit. So I kind of slowed down on platinum a little bit. Um, I may start buying some more soon. It just kind of depends on. I mean, I think the price could potentially go lower depending on if we have recession or not. So yeah. Ken said, love to have lunch sometime, make the drive. I bet we have a lot. Yeah, let's do it, man. Send me an email at the moneylevelshow.gmail.com and we can get something scheduled, because you're up in this area, right? Aren't you in close to Washington State somewhere? Yeah, send me an email. We'll coordinate something. Let's see. My guy Max said, I'm making coffee, buying armament, bullion, food for the pantry, looking for land, cows, other livestock, and milling equipment, getting ready to make my homestead and farm. Man, Max, you're very inspirational, brother. You're very inspirational. I got to get on that level, like, especially, just, looking at, I interviewed Rick on, like, the food and water crisis. That's what we talked about mostly. And, yeah, you gotta be self-sufficient, man. Like we gotta be self-sufficient. So, definitely understand you, being in your prepping mode. I love to have a spot to come to, man, in a crisis situations. All right, let's see. JT going to sleep, y'all. He checking out early, man. It's only what, 8 o'clock. JT checking out early, y'all. He getting old, man. Maybe get lucky find some land with mineral rights. Hey, that would be dope. Just minerals. And then Go Flow just tapped in. Appreciate you, bro. Just checking in, seeing how y'all doing and everything. Would love to, just hear how y'all doing, man. Let's see. Let's see. Max said, "I'm like 150 to 100 acres. We can link up, make a plan, brother. You're always welcome to sojourn and build community with me." Yeah, most def. Are you still in New York? Are you still in New York, bro? I think you was in North, right? You was in New York, I think, somewhere around there. Ken said platinum using in catalytic converters, also likely future economy. It's very scarce. Perhaps biggest thing is where it's mined, South Africa, and infrastructure problems. It's cheap, charted. Yeah. Platinum. Platinum is cheap. I feel like I should be. That's what I was telling you. Like, it's very psychological. I feel like I should be buying now. Because it is cheap. Same thing with silver. Silver it's the premiums are down right now. So like it's like the time to be buying. But yeah, it's very psychological. When things get cheaper, like, we run, but when things start, going up, we chase it. So I agree with you. Like, this is the time to be purchasing. East Pierce County, man, you very close to me, man. My son lives in the Spanaway area, so I'm out there every now and then. And yeah, shoot me an email, man. Let's link up and make something work. And then Max, yep, still in New York, upstate, in Missouri right now. There's some nice land out here, but I want to build in Tennessee. Yeah, it's cool. Tennessee, man. Tennessee seems like a cool spot. Missouri, man, are you getting some good food out there, man? Man, there's a spot called Nephews, man. I enjoyed that spot. It was a catfish spot. I love fried catfish. I don't eat it much. You know what I'm saying? I gotta keep my arteries clear. You know what I'm saying? I ain't trying to drop dead or nothing. I had a heart attack last year, minor heart attack. So I don't eat fried food as much, but I love fried catfish. That's one of my things. But it's been a little while since I had it. I may go get some if I've been on my best behavior over the next month or so. But yeah, Missouri is where it's at. And then we had, I mean, I'm gonna be in New Orleans. I don't know if you're in New Orleans, Max, but you know they got some bomb food down there, so I'm excited for that opportunity. Uh, Inflation conditions, platinum goes up. It's coming, booming economy. Palladium goes up. Yep. Yeah, I'm definitely gonna be. I bought some palladium recently. I'm gonna buy some more at some point. I think this is the time to buy. You know, this time where you be courageous and you go in and you buy. So definitely. Let's see. I'm by Fort Leonard Wood, but nephews, where that St. Louis. Yeah, nephews is in St. Louis. It's in the St. Louis area. I was down there one time. I had it. It was so good, man. It was so good. So, but yeah, if you was in the area, you know, cool. But yeah, um, I don't even know where Fort Leonard Wood is. That sounds like super far. Um, yeah, man. Be sure to go hit my link, man. Hit my link. Support the channel, man. Sign up for the New Orleans. I think you got my email. I'll send you the link, bro. Use my referral link, please. But yeah, trying to get some more people signed up for that because that's going to be an awesome time. And I'm hoping to. I've been in talks with Lynn Alden about getting her back on the channel, and so I'm hoping that works out if our schedules can link up. So I may be interviewing her down there. Um, and so yeah, let me get the. Yeah, I got the link. It's like right here somewhere. I can get it to you right now. Hit up my guy Alex. Boom. All right, so here is the link. Dun, dun, dun. I don't know if it works in the chat. I don't know if I post a link here if it works in the chat. Let's see. Does that work? So yeah, but yeah, New Orleans, man, bomb food, man. I just need a southern experience. You know what I'm saying? I'm not gonna be out there like late and stuff like how we did in Boca Raton. Though New Orleans is not the spot for that for me. So yeah, so I'm definitely gonna be willing to go out and have some dinner and stuff. Rick and I talked about getting some lunch together and such. But other than that, man, I'm gonna be in the hotel, bro. I'm gonna be in the hotel. I'm not gonna be out. Boca Raton was very, very safe. I've heard some different stories about New Orleans. Like I'm like, yeah, I'm not gonna be out late. So yeah. Let's see. Ken said he did basic training in Fort Leonard Wood. Ken, were you in the Navy, Army? Were you in the Air Force, Marine Corps? It said lost in the woods. Yeah. Yep. But yeah, you all, I'm hoping to I'm gonna be releasing this interview with Rick Rule soon. So that's gonna be it's a really good one. It's an interesting topic. Got some more stocks that he invests in out there. Um, me, I just try to follow the money. You know what I'm saying? I try to follow people, copy off people's homework who's smarter than me. But I do it within reason. We do have some people that you know um, that really had some hard times with these junior resource companies, which I'm actually going to share some of the comments in case y'all didn't see them. All right, let's see. All right. So yeah, some of the junior resource companies, people have had a hard time. This is Rick Fool. He said he's gonna keep a 10-foot distance from this one. When I first started off, I ended up losing a small fortune on explorers. Guess I thought I could pull a Rick rule. Ended up being a Rick Fool. And then this gentleman, or whoever this is, said I am down about 85% on this one. And this was from Ridgeline Metals, Minerals. And so, yeah, I think ultimately, if you're going to speculate, you can speculate. But you got to speculate within reason. Like me, I try not to go to these extremes. Like I'm not going to invest a life-changing or fortune in a company, in an exploration company. I mean, I'm trading just a little bit. Like, okay, let's see. Let's look at Ridgeline. All right, TSX, yeah. So Ridgeline, I was talking with Chad about it. I mean, I don't know where this person bought, but I mean, this stock was at what, 77 cents. Now it's at 15 cents. So, I mean, I'd rather buy here than up there, and if I buy here, I'm not, I'm not also not investing like a huge amount of capital. So, I'm not investing a huge amount of capital. I'm not investing anything that I'm not willing to lose. Same thing with cryptos and all that stuff. Like I've been dabbling in crypto here and there just as a speculation. So like I just speculate. I'm not gonna bet a fortune. I'm not betting my kid's future in some of these companies. But I mean the cool thing about Chad though is Chad, like he does that. Like that's how much he believes in this company, is that he invests that much, invests their life savings into the company. So but yeah, that's the junior miners for you, right? Junior explorations companies for you. So yeah, there are some, and there are some other stocks, I'm dabbling in. I'm not just, I usually dabble in natural resources. There's some stocks I'm dabbling in right now. I would say I've been dabbling with Verizon. Verizon's taking a huge crap. I mean, 2010 it was at $25. It's at, I mean, it's been significantly lower. They pay about a 6-7% dividend. So I'm kind of dabbling with them. Another company I'm dabbling in is JD. JD took another dive. Chinese listed company, pretty much like a Chinese Amazon. But yeah, they're at 20. They hit $26, and they haven't been at this level since 19, somewhere around there. And after the pandemic hit, they skyrocketed over $100. So I've been dabbling with them. I'm not into a lot of tech companies. They have to be just super beaten down. Been dabbling with Stanley Black and Decker. They pay about a 4% dividend, but they've been getting just annihilated for a while. And so I've been dabbling with them as well. So I do kind of dabble here and there with other companies and stuff. Take a look at some of the shipping companies. Yep, I'm about to look at them now. Let's go. We looked at some last time. I've been buying DHT. So I've been buying. I was buying them at around $8. They pay about 10% dividend, and the shipping containers, like they've been up significantly. So we're gonna have to ship this stuff around the world. And there's some other ones I haven't dabbled in yet, like Frontline. I've been looking at, but I haven't touched it yet. But they've been spiking. I think they pay a solid dividend as well. I mean, look, just in July it was at 13 bucks. Now they're at 20. People got to ship stuff around. Let's see, Frontline pays a 12% dividend. So, any other ones you looking at, Ken? I've heard of like Stinger. I think Sting is Sting, something like that. STNG. Scorpio. They've been up, but they're just some of these companies like I will invest in, but like, you gotta kind of be careful because you can easily just have too many of them, like, and it's like, okay, like I'm trying to invest more quality, in terms of not saying this isn't a quality company, but just like how much I can spend quality time with with these companies. So I'm trying not to have like too many stocks in my portfolio, Like I used to copy Lynn Alden's portfolio and would like have like 100 stocks in the portfolio and wouldn't have nowhere near as much capital as she would have in the stocks. Like, so now I'm just like focused on building like core positions and a few solid companies. I think right now I'll probably only have about 15 stocks. I think about 15. Let's see. I'm gonna count them out. But you want to be able to spend quality time, be able to look at what the companies are doing, read certain things that's going on with them, such and such, blah blah blah. See, right now I have 16 stocks I'm investing in. 16 stocks. Let's see. Golden Ocean. Let's go look at it. Is this the ticker for it? Maybe that's it. Yeah, it looks like a freaking tanker chart. It's funny how they all they all look the same, Golden Ocean, dang, this is still it hasn't bounced up. Yeah, it hasn't bounced up yet, huh? They pay a dividend, man. $9 dividend. Man, I need to hang out with you more, buddy. May have to they haven't spiked up like the other ones yet. And they pay a 9% dividend. I may have to go ahead and add them to the list, man. Golden Ocean. Let me put that in my notes. I just told you I wasn't trying to have as many stocks, Ken. Let's see, Star Bulk and Eagle Bulk. Let's see what they're about. Let's see. Star Bulk. Star Bulk Carriers Company. Okay, so they're up 19 bucks right now. SBLK. I'm just on the other site looking at the dividends and such. They pay a 12% dividend. Man. Hey, Ken gave us a few plays, y'all. We may need to start listening to Ken on the channel. Hey, are you downstairs? Go ahead. I'm live. All right, y'all. My wife in here bothering me. I'll turn this camera on her. So yeah, I'll be Go. She up? Okay. Yep. Here I come. All right, y'all. Duty's calling. Let's go ahead and look at the last one. Eagle Bulk. Eagle Bulk shipping. Let's see, they're at $42. They're kind of expensive for my taste, but let's see. And come on with the ads. Dang. 42. Eagle. It's Eagle playing. What are they paying for me to hold them and take this risk? 7% dividend. Man, Ken, those some nice plays. I'm gonna have to look into them. I'm looking at Star Bulk and Golden Ocean. Eagle Bulk at 40 bucks a share. I'm like, I'd rather have more shares. So let's see. I'm trying to consolidate too, but there are many opportunities, and some of these are pretty risky. Yeah. I'm learning from you, books, and a few others. Thanks to you for keeping up the learning. Most def. I mean, I haven't even showed. I do have more than 16 stocks. I would say that. I do have more than 16 stocks. And I say that because I opened that Interactive Brokers account and I started buying stocks on other stock exchange. However, I try not to view it as my portfolio. It's kind of like more speculation, things of that nature. I did start. Good. I'm going to share screen again. I'll give a couple more companies I'm investing in. It's not financial advice. I got so many books to read, Ken. It's just, I just need to stop. Like I keep seeing these books. I want to read that. I want to read that. But while I'm in school, like it's just hard to get through them extra books. Like I'll be done with school with my master's in December though. So I'm hoping this last course will be a lot easier. All right, so I'm investing in Mara. This is Mara does Bitcoin mining. This is my speculation play on Bitcoin in the retirement portfolio. Obviously, Mara, when Bitcoin was at freaking 60-something thousand, spiked to $83. I actually had them here at $3. I should have held them, but they went up to 19. But I took profits, and now they're back down to 759. So that's a spec play. I'm not doing, valuations or anything on that. That's just pure spec. The companies I have in my portfolio, y'all know I had Tony on the channel, Tony Retta, good friend. Tectonic Metals, they're doing diamond drilling now, and they're at 13 cents. This is in my Interactive Brokers account. I have they are exploration company. I have Riverside Resources. I interviewed Dr. John Mark Stouty. They're at 12 cents. So Riverside Resources. And I have been buying Sprott. But dang, what the heck? No. The Sprott Uranium, Physical Uranium Trust. Okay, it's U.UN. So I have been buying Sprott Uranium Trust. This is less of a spec play. The play on physical uranium. And I've been buying Power Metal Resources as well. As you can see, I've been buying them. They're on the London Stock Exchange. So I have been buying companies. This is kind of like, I feel like it's more of I treat it like my crypto platform outside of like the companies like Sput and then Joy Energy, Journey Energy. I've been buying them. A solid oil company. Josh Young talks about them a lot. It's one of his favorites. So I have been buying them. And yeah, so other than that, some of these other companies are just speculations, people that I've got relationships with and such. I'm buying into and hoping to hit big on one of them. Salute and cheers to all the stackers. Hey, yep, salute. All right, y'all, duty's calling. I got to get going. So hope that you're all doing well. Have a blessed day. Peace.